Hello everyone, this is Teddy Kekstead and welcome to Forex Trading's Forex Market Analysis for the week of February 15th through the 19th. Real quick, we want to show you our disclaimer just to remind you that this is for illustrative and educational purposes only. And also, real quickly, if you haven't subscribed to our YouTube channel, please do, Forex Trading Unlocked. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right, now we have our Forex-Trading-Unlocked.com website pulled up. We have the workstation page already also pulled up, and we're going to go all the way down to our chart where we already have the dollar index Dixie chart pulled up. Okay, so we have last week where the market kind of settled, the broad-based FX markets was settled kind of neutral after the last 3 days of trading, but the first two definitely unloaded, and the dollar bears got a little bit of an edge on the US dollar. Now, today it's a little bit of a mixed bag of goods. We had reached our downside and upside targets for multiple currency crosses last week. We hit our target zones. Some of them hit their extreme target 2s, and some of them just pierced into the target 1 band. So let's see how that is shaping up real quick. All right, so first we'll start off with the Euro-US dollar. The Euro-US dollar remains in a bullish trend for the long term and medium term. The short term, obviously, on the daily has been bearish, while the shorter term hourly has been bullish. We did have a bullish engulfing line buy signal that was triggered right here. As you can see, this $21.50 area was our first target level that was reached. We had long positions on that we had executed back on the 8th. We had also gotten out of our first level, target 1, as I said last week, and then now it's been bobbling around. As you can see currently right now, it's very quiet. You have to remember, U.S. markets are closed. European markets will be closing soon. Asia, so the week is off to a little bit of a slow start. If we didn't have much action, and you got to remember there's Chinese New Year going on as well. So between those factors, there's probably going to be a bit of a slow start to this week. I wouldn't expect to see very much volatility. But you never know. Anything can happen, especially. That's why be very careful if you're trading today. If you already have positions on, then I would say work them. Make sure you have your stops in place. Today is not a good day to enter a new trade, at least until this evening's trade when the Asian markets come back online and starting Tuesday's trade. Like I said, with Chinese New Year going on and U.S. markets having a holiday for not all of them, but some of them, there's not really going to be very much activity. So, but for the most part, since the banks are closed, they're done, especially for the currencies for the rest of the day. So what we are looking for, basically nothing today, and then with any luck, we'll see another pop up to this $21.96 area. That most likely will put a cap on the rally for the Euro-US dollar. What it really needs to do is get above this high here, which if it does, that would mean it does take out this $21.96. Should it do that, you may begin to see momentum build to the upside and press resistance a little bit more. The dollar index, as it's starting to sag, see, here's the thing, is we have a mixed bag of goods. The British pound, which we will get to next, is the second biggest weight in the dollar index. As you can see, the dollar bears they didn't get much except for last Monday out of the euro. After that, there wasn't very much left. The dollar bears out of last Friday. And then today, as you can see, it's just only slightly lower on the day. So not looking for much today, looking for some follow through to the upside. So dollar index is not going to be the best gauge, especially when you see how the British pound is rallying like this. This has a long-term, medium-term, short-term, daily, and hourly trend is all bullish. Do not try and fade this. Eventually the top will come. However, with oil being strong and other commodities being strong, and since the UK no longer has to fund the disintegration of the EU in their financial system, that's probably giving a lot of strength to the pound versus many currencies, which it is if you look at the pound crosses. In fact, one thing you want to look at here is the British pound over the euro. See that? The British pound over the euro is making new move highs today. It broke out to the upside. That is why you're seeing the euro kind of weak against the dollar, as well as not doing much on today's trade. So this is showing you how much strength there is in the British pound. So I think this is one of the, since it's the second biggest weight in the dollar index, it's going to make the dollar index hard to use as an indicator as long as this is trending so fiercely. This, as far as long-term projections, how far can this go? Well, anyone's guess is on this one. The UK does have a lot of issues with lockdowns and things like that. So I think that for the most part, this is commodity driven and EU separation post-Brexit driven. I would look for the pound dollar to see a turn before you'll see it with the pound euro and stuff. So the pound is going to be probably a very choppy trade as it does develop a correction. You might start to see moves like this where we'll see a harsh sell-off and then get like choppy like this, and then most likely not continue to trend higher, but develop a very wide range trade, which will be indicative of pound strength versus other currencies, meaning that if the pound is strong versus the euro, the Swiss, and other currencies, not so much against the dollar, you'll have sell-offs where when the other currencies gain a little strength, you'll see a nice pound US dollar sell-off. But as soon as the pound starts to gain strength on those other currencies, that's where you'll probably have to look for a bottom with the pound US dollar, meaning that we will still probably continue to make higher move highs and higher move lows, which is indicative of what? A bullish trend. Be careful trying to fade this. Now let's look at the US dollar Swiss. As you can see, last week, except for Monday, there was really not much, or excuse me, Tuesday, there really wasn't that much of a trade that hammered this market. We did have a sell signal here, a short-term one, and this hit its target, actually. This low from last week at 88.90, this is going to be key support. I wouldn't expect much today because, like I said, because of the holiday. If it falls below here, then your target will be this level here, because this will be a key low, most likely because you're going to have basing because of the amount of trading that has happened in this area right here. So across here, I think around 88.32 to 38, this little support band, you're going to find a lot of support. So maybe we still dip down to there. This might be a good place to look for a buying area. It does look like the US dollar Swiss is starting to set a base. The overall trend is a bear, so use caution, but we've had signals giving the dollar some strength, and I think that you'll start to see, at least with some nice little swings like we had when it sells off, when dollar weakness comes into play. Be very careful. So keep your stops tight on your longs, and definitely be careful with your shorts, because this can grind higher. So we'll see how this works. Right now we don't have a signal. We hit our downside target last week. It's a holiday market right now. We're going to have to really gauge things more tomorrow, or if we get some decent trade that develops once the U.S. markets open in 6 more minutes. Okay, so let's cruise on over to Japan. Now, the yen, their markets were open today, obviously. You can see, look at this. U.S. dollar got a pop against the yen. Well, this is, I would say, probably because we have a good inverse relationship where, meaning that while, say, the pound and the euro could be strong against the dollar, and even the Australian dollar and New Zealand dollar, doesn't necessarily mean that the yen will be. Especially with the rising price of oil. So remember when I said we have a commodity-driven trade with the pound? Well, now that we will no longer be exporting oil anymore in the U.S., that's also a big deal for Japan, because it limits their ability to get supply from yet another global carrier and producer, which puts also geopolitical tensions more on the stage for them, because we have very good dynamics between Japan and the United States, have for many decades, and even over the past recent 10-15 years, because of the fact that the administration is now cutting off oil exports and production in the U.S. This will put a strain on Japan, because obviously they're an island and they don't have oil. And as much as they have been going in towards the greener stuff, if anything, solar and wind-powered stuff and water-powered stuff has been very huge over there for decades already. But they have all kinds of other problems too. You got to remember that they have an aging population, and they are a big exporter. So no matter what, a lot of what they need the oil for and gas for is for ships and heavy equipment, which definitely right now are not being run on electric power, which would just cause, I mean, there's just the dynamics of it just don't work right now. We're not at that level of technology yet, but who knows? Maybe who knows what happens, and it can happen any day. It'll pop up with something that all of a sudden can run a big backhoe and a Caterpillar tractor for hours and hours and hours. So anyhow, this is why I think you're seeing this as far as fundamentally getting the dollar bull. We are making higher move highs and higher move lows, and now with this explosive move to the upside today, I would say that you're looking for a challenge of this high up here from a couple weeks ago. You can see that the short-term trend here continues to make higher move lows, higher move highs, but remember that the overall long-term trend on the monthly and the weekly is still bearish. We have become neutral on the daily. This is still gauged as an upside correction. Should we get a swing point through here at $1.577 and breach this level, I think you have a good chance of getting a whole dollar up to about $1.106.5. The slope of this trend is not too steep. It's almost a 45-degree, which is a relatively smooth slope for any short-term or long-term trend. Right now, we're still viewing this as a short-term corrective trend to the upside. We would need, obviously, a lot more time and price action to figure out whether or not it's a true turn in the market. It is bottoming and basing right now, though, with this type of correction, because this correction has been going on now for over a month and a half. So we'll go on the side of dollar strength when it comes to the yen, especially as long as oil is remaining higher. And also you got to remember that the 30-year treasury bonds, that's another market that has continued to pound lows. In fact, here's a quick lesson for you as a gauge for any type of currency direction with the US dollar. When you go to Forex-Trading-Unlocked.com, go to the commodities under markets, you pull up the commodities tab, so bringing this index page up. And when you toggle down, oops, wait, we went to commodities. I'm sorry, we want to go to interest rates or futures. You go to the futures tab, and you toggle down, and what this will have is some stock index and also some bonds. We start with the 30-year bond, go all the way down to the euro shots. Why do we have these things? Well, the euro, excuse me, interest rates are a function of currency pricing. This is the treasury bond market. It has been trending lower now for months. Okay, this goes all the way back to August of 2020. So this is in a 7-month decline. Okay, now this is a big deal. This is the weekly. Here's the daily. The treasury bond market has been slamming new lows now for weeks. As this continues, it's hard for the dollar to be too bearish because of the interest rate equation. The fact that the market settled on Friday at $1.6605, this is huge. 166.05 rather. This is a big deal. Any trading below this 168 level is definitely very bullish to US dollar. So that's another thing that's giving a lift to the US dollar yen. So as the 30-year continues to remain low, in fact, we can even check on this right now to see where it's at right now, because the electronics market should still, they may be, even though the banks are closed, this may be open. Let's see, $1.6501. Okay, yeah, that's right. They're not. The Globex is closed right now, so we won't see anything on. That's another thing too. The snap, because of the interest rates being closed for this extra day today, they'll open up this afternoon. That's when you might start to see some swinging action in the US dollar yen, as well as all of the other currencies. Now let's look at the Australian dollar US dollar. And by the way, if any of you out there have any questions, you go right ahead and don't feel afraid to ask anything while we're going through this video still. We will be going back to the euro, but first let's finish up with the Asian zone. All right, Australian dollar, US dollar, we had a nice little rally here. This is another commodity-driven currency. So as dollar bulls try and fight and grapple with certain currencies, they're going to be really hard pressed with the Australian dollar, US dollar. As you can see today, we poked a higher move high after a lower move low. That puts us on the neutral campaign. However, I would use a lot of cautions being a bear. If you're a bear, I would use this 78.24 as your risk level. Any trading above here is very bullish. The trend for the Australian dollar in the long term is a bull. The medium term bull. Daily, it's been neutral because it's been making, well, it's been short term daily up until the last week was a little bit bearish because we've been making lower move lows and lower move highs, which is indicative of obviously a bearish trend. But this is viewed only as a short-term bearish correction. So key off these pivots. Any trading above 78.24, this would be bullish. I would do not, maybe use call, do not try and sell in front of this one. If you want to get short in front of it now, this is your risk level, looking for some sort of a test back down here. Remember, we have this little upward sloping support line holding the trend intact. It's pretty much a 45-degree angle, which is holding that also up. I do not expect to see much of a slide off of this one. Should we take out this line, then the next level would be the 75.66 area. This would be a key failure level. If we do not take out the 78.24 and we end up falling down on support and taking out 75.66, well, that would be a lower move low after a lower move high and on a major daily basis, which would help us to really view this as a corrective trend lower that could have probably, I would say, the ability to get down to the 74, maybe even 73 even area. The only thing I think you have to watch about this is, in order for this to happen, for the Australian dollar, US dollar to get down to this levels, the 30-year bond is going to have to remain kind of around where it's at, not any big rally there. And then also you would need to see a sell-off in crude oil. I don't see that happening anytime soon. And if we do, it's just because of expiration. Remember that the futures on oil, they have rollover every month versus the financials, which have it every third month, which we are coming into rollover for the currencies coming up in the next few weeks. And we will be paying attention to that as it unwinds. So right now, a little neutral on this one. Aggressive bear only against those highs from before with the Australian dollar and the US dollar. Now we have the New Zealand dollar, US dollar. This is another tricky one too. It's kind of neutral. I would key off of this 71.37 level. A failure from here will have us back on the 70.94. And then we can probably see this correction being pressed down towards the 69 area. As you can see, we have this upward sloping support line keeping the trend intact. Even if we just go sideways, eventually we'll bounce off this and test it. That would take obviously quite a bit of time yet, a few months. But this one here is kind of locked in neutral. Short run, it's been making higher move highs and higher move lows. So we, like I said, key off the 71.37 area. A failure here would take us off the neutral to higher path and then put us back on the neutral to lower path. This is also commodity driven. We're waiting for a signal. We just don't have anything right now. So we'll see how things pan out after Monday's trading is over. So let's go to the US dollar, Mexican peso, because for all of you thinking about your spring break trips and how much it's going to cost and what have you, the nice thing is that if you haven't booked your tickets for Mexico yet, your deal on the peso is a lot better than it was in January. So hopefully you didn't try and buy the peso then, because you're getting basically almost a whole peso higher right now. So we'll see what's going to happen with this one. Short-term correction to the downside. This is more of a basing. We have to see how things come out with the economy and the coronavirus. If tourism really starts to come back to Mexico, that will be a resurgence to their economy. We do have a lot of transitionatory things going on between the U.S. and Mexico. The question is Biden going to overturn the rewritten NAFTA that both sides even say was a disaster the first time, and well, obviously one side does, but both sides said that NAFTA was a disaster, and we're all for the restructuring of it, which happened over the past couple of years. If this gets disrupted and goes back to the way it was rewritten, then you will see a lot of issues and probably see a lot of volatility in the peso as well. and that would also diminish the value of the dollar versus the peso. We'll see what happens. Right now, key off the 2050 area here and the 1954 area here. Right now, we don't have a signal. We did have one here, this 2-day slide, which has continued to press the lows, but we're pretty much in the area where our target is. And like I said, with this neutralizing here, this is going to be a choppy mess here. I would really wait for a true swing trade that would either take us below 1954 or above 20.5 to give us any real trend-based move to really trade off of. US dollar, Canadian dollar. Let's go take a look at this real quick. US dollar, Canadian dollar. This one's trying to base. Boy, is it having a hard time doing it. But it may actually have done it. We'll see what's going on here. Today, obviously, it's lower. Remember that there's a holiday in the U.S. Dollar bears are definitely having a little bit of a good day today, but not much. I mean, look at how the yen was. We looked at that and a couple other currencies already. So there's dollar strength and there's dollar weakness out there. Obviously, dollar weakness is coming into the Canada as the U.S. markets is now 8:36 Chicago time. So we have a little bit of action here with some of the traders that are playing around in the markets. Remember, most of them are closed, especially the bank markets. Currencies are open because they're global, not because they're U.S. based. So what are we looking at here? Continuing to make lower move lows and lower move highs. Key off of this $28.84 area and this $25.91. Oil is another driven part of this trade. Canada's not going to stop drilling oil and make it producing oil. They are a commodity country. So that is going to weigh on the U.S. dollar. Canada, should we see a correction in oil, then I think we could see another challenge of this $28.84 area. I'm not bullish the U.S. dollar Canada by any means in any long-term way. It is a bear on the long term, the monthly, the weekly, the daily, and even the hourly. So we are not trying to catch a falling knife here. You never should try and pick a bottom. So we will continue to monitor this one. We do not have a signal right now, so we just have to wait with this one. But as long as oil is rallying, it's going to be tough to be a buyer of this one. I would look to, now if you want to do a low risk buy, you could try sometime between now and the next day or so, buy against $25.91. This would be your risk level. Any failure here, you should not be long. All I can say is you're on the wrong side of the market because you're going to be pressing newer move lows on the monthly, the weekly, the daily, what have you, the whole gauntlet. So momentum could build, and especially if at that point there is a rally going on in the oil market, any type of corrective bounce in the interest rate market, what we looked at, or there's a couple other variables that could really drag on the U.S. dollar. All right, let's take a look at the Euro-U.S. dollar now that we've crossed that 8:30 timeline. Oh, see, nothing going on. So that's pretty much what you're going to expect for the rest of the. Oh, here we go. GFUD. Do you think the British pound UD will do another drop down right now? Okay, so you must have. We got. JF Freud here on the chat box. We're going to go back to the British pound, US dollar. He obviously wasn't here for the beginning. Okay, we'll catch you up to speed. Yeah, this one here, as far as a drop, let's take a look at the hourly. Okay, so if you want to trade this on the hourly, it's a sleepy holiday trade. Here it is right here. We had topped out back around, when was it, 2 a.m.? Was actually 6 hours ago. We made a higher move low, we made a lower move high, and right now we have this little bearish engulfing line. I don't like using this so much on the intraday, especially on holiday markets and stuff like that, but I would say you probably, if you sell against the high of the day today, and especially if we take out this low from the last hour, which was at $1.3893, you might get a nice little corrective move down to $1.3860, somewhere in this area. I don't think you're going to take out this bottom that was formed here back on Friday. This is a steep hourly trade here, but that's also in lieu of knowing that there was a holiday market in front of it. So there may have been, that's another thing you got to watch out for. The rally against the dollar that happened on Friday into today could reverse in a very big way tomorrow once the U.S. markets come back online, just because of the fact that a lot of traders could be playing on the fact that a lot of people won't be working in the U.S. You know, banks are closed. Traders aren't going to be paying attention to stuff. Interest rates aren't going to be moving, things like that. So this is a way they can push the spreads, and then they'll snap back tomorrow once all the other algos and stuff start to kick into gear. So as far as, British pound, U.S. dollar for J. Freud, I think we could get another drop maybe on the hourly, but it's, I would say you don't risk more than the high of today, So yeah, for a short-term little short, no pun intended, you could probably risk that little area. But anything above the high of the day today, you do not want to be short. Just remember that. You are trying to get in front of a freight train. So cool. Glad you like that. Got a good answer for you. I don't know if there's anybody else. Oh, here, since you probably missed the beginning part, Jay Freud, here's another one for you. Let's look at the pound versus the euro, which we did earlier. This is another reason why the pound is going to be hard to sell off with the dollar. If the euro especially starts to go up against the dollar and the pound is up against the euro, then the pound versus the dollar is going to remain bullish just because of that correlation. So that can also give you a little gauge. Something I always tell people, the best indicator of the market is the market. So especially when it comes to currencies. And so for anyone that is now listening or didn't listen before, when you're, like, for instance, for the pound US dollar, our friend here is looking for a little break in the market. Okay, well, if the pound is strong versus the euro, okay, and then we go back to the euro versus the US dollar. And the euro US dollar here on the hourly is weak, okay? That means that if the pound is strong versus the dollar and the pound is strong versus the euro, if the euro especially starts to turn positive, then that's going to give more credence towards the pound going higher. If the euro continues to go lower versus the dollar, then that shows you another sign of how much strength is either coming in on the pound side, or also how much the pound is beating up on the dollar side as well. Okay, so as far as using that as a gauge, like I said, if you're bearish the pound US dollar, what you would want to see would be, for instance, the euro US dollar continue to go down, but then you would also want to see with the British pound euro, you would want to see all of a sudden the pound euro start to go down. If the pound euro starts to go down, while also the euro starts to get strength versus the US dollar and things like that, then you probably will see the British pound US dollar get a little sell-off. Okay, so that's a way of kind of gauging strength. Instead of using just indicators in one market, look at how it's faring versus the others. So meaning, once again, like if the pound is your focus, look at how it is comparing to the other big currencies, especially. So if you look at the pound versus the Mexican peso, it's probably not going to give you a very good indicator of how it's going to do versus the dollar, just because it's the North American trade zone. There is a trade there, but that's a whole nother wide dynamic, and the markets aren't as strong in Mexico comparatively with the pound versus the UK versus the US are comparable as far as business structure, and especially in finance and the banking markets and currency markets. So if there are no other questions here, let's go back to the euro US dollar. We'll go back to the daily. Okay, so here we go. As we've been talking, got a little bit of a lift. The euro US dollar is up a couple pips. So yeah, once again, we need a challenge of $1.2150. If it can breach that, then $1.2196 will be our next little gasp to the upside. Now, here's the thing: is the pound trade. Once again, if the euro does make a spike up there, with that giving that strength, then especially if the pound is strong versus the euro, you cannot fight the pound US dollar. It will just accelerate that rally. So we'll be watching that, but don't expect much until, like I said, the Asian markets open up later. So since there's no other questions, just want to remind you guys, if you haven't subscribed to our YouTube channel or our Twitch channel, please do so, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And also, if you guys are going to be around on Wednesday, if you look at in the chat, there's a thing for, let's see, I think I have, did I post it? I did not post it yet. Here, let me give you something to look at for the next couple days. On Friday, if you guys are around, I got something for you guys. You're going to like this one. So let's see. Let me get this to you. Hang on one second. I'm putting this out in the chat for you. Okay, so for all of you guys that are watching here on Twitch, I have a link here. So on Wednesday at 10 a.m. Central Standard Time, we will be having a live interactive webinar. We will be going through any of the Forex markets you want to ask questions about and see what's going on. We're going to try and get as many people on the chat room to get a lot of conversation with lots of traders. Right now we have, according to LinkedIn, something like 200 and something people signed up that are planning on coming to attend that day. So that'll be a great day to chat with a lot of Forex traders, a lot of professional traders from around the world, and see what they have to chime in as we go over the markets and different trades. The holiday trade will be over, so that'll be something to definitely get into and pay attention to as well. So do you guys have any other questions out there at all? Anything at all? Just let me know, because we will answer them. Otherwise, we're just going to get ready to end this one, and we will have a couple other webinars over the course of the day once after the holiday market is over. So thank you very much for your time. This is Teddy Keckstedt from Forex Trading Unlocked. We totally appreciate you guys sharing your questions and asking, being involved with us. And we will see you again